Fintech ETFs capture stocks involved in financial technology, a fast-growing segment of the banking system. Here we'll check out the best Fintech ETFs. Fintech is shorthand for financial technology. It refers to technology companies involved in mobile payments, e-commerce, budgeting, credit, etc. Sometimes these can be small, volatile startups that are hard to pick individually, so ETFs provide a vehicle to diversify within this narrow market segment. Fintech usage has soared due to the pandemic, with more people adopting contactless payment systems that service a demand not satisfied by the traditional banking sector. Think companies like Square, PayPal, Apple, etc. Everyone has a smartphone and internet access now, setting the stage for fintech to continue surging in popularity. Surveys show most consumers are unhappy with their traditional big bank, further accelerating the shift to innovative, online-only tech-driven banking solutions. Fintech is not just mobile payments and banking. It extends to things like budgeting, credit, insurance, lending, mortgages, savings, investing, and more. Now let's check out the best Fintech ETFs. They vary in scope, cost, popularity, and selection. First on the list is FINX, or FINX, the Global X Fintech ETF. FINX from Global X is the oldest fund in this space and has over $1 billion in assets. The fund captures companies in developed markets around the world that get most of their revenue from fintech, insurance, wealth management, payment solutions, lending, crowdfunding, blockchain, and more. The fund is market cap weighted and, as such, skews heavily to the US at 65%. Followed by Australia at 15%. Top 10 holdings include Square, PayPal, Intuit, Fiserv, and more. FINX has 40 holdings and an expense ratio of 0.68%. Next on the list is ARKF, or ARKF, the ARK Fintech Innovation ETF. ARKF is a fintech ETF from the popular ARK Invest, led by Cathie Wood. ARK have seen crazy capital inflows in recent years, for better or for worse, due to their stellar performance in 2020. ARKF is actively managed, allowing managers to select and weight constituent stocks as they see fit. ARK as a whole are focused on disruptive companies. ARKF launched in early 2019 and has since amassed over $4 billion in assets. ARK state that the fund aims to capture the introduction of a technologically enabled new product or service that potentially changes the way the financial sector works. The geographical exposure of ARKF differs somewhat from FINX earlier. It's also exposed about 65% to the US, but is then followed by Hong Kong at 18%, Singapore at 4%, and Japan at 3%. Top 10 holdings differ as well. ARKF has over 10% in Square, and then holdings like PayPal, Zillow, Pinterest, and Shopify all comprise more than 3% each. ARKF's active management commands a higher fee of 0.75%. Next on the list is IPAY, or IPAY, the ETF MG Prime Mobile Payments ETF. IPAY goes narrower within fintech, focusing solely on mobile payment stocks, payment infrastructure, processing, services, and solutions. This narrow segment is usually seen as having the most promise under the fintech umbrella. Surprisingly, this fund has over $1 billion in assets. Top 10 holdings include the usual suspects like Visa, American Express, MasterCard, Square, and Discover. This narrower focus comes at a cost. IPAY has a fee of 0.75%. Last on the list is TPAY, or TPAY, the Tortoise Digital Payments Infrastructure Fund. TPAY is very similar to IPAY, but roughly equally weights its holdings, so it's not as heavily skewed to the big credit card providers like Visa, MasterCard, etc., even though those names are still in the top 10 holdings. No single company makes up more than 5% of the fund. TPAY is much less popular with only about $11 million in assets, but it's also much cheaper with a fee of 0.40%. All these fintech ETFs should be available at any major broker. What do you think of the fintech space? Let me know in the comments.